We are a little more than a half an hour till the opening bell on Wall Street. Joining us right now is Liz Young-Thomas, head of investment strategy at SoFi. Good morning to you.
Good morning.
Heck of a day yesterday.
Sure was.
We'll see whether today's a heck of a day too. What are you seeing? What are you thinking? And by the way, how's the service working? Because some other folks were actually really having some problems.
There were a lot of problems yesterday, which happens on days when you have a lot of activity that nobody's prepared for. So what I would say,
we got to fix that at some point.
Yes. As far as I know, we didn't have any problems, but. What I would say about yesterday is it's difficult in this kind of period because there's so much uncertainty. So you have to focus on what do you know. What we know is that in the short term, markets tend to overshoot, both on the up and the down. So what's looking like is happening today is that we overshot yesterday on the down. Usually that gets exacerbated by algos. Probably some of that happened. We had a lot of unwinding that was going on. But the other thing I would say is that something that I feel pretty certain about is you don't have events like yesterday or even that 3-day period that culminated into yesterday and just dust yourself off and pretend it never happened. Nothing's been resolved yet. We still have issues with the yen. I don't think that's over. We still have economic uncertainty. I don't think that's over. It's going to be a long time until we hear from the Fed in a scheduled way. If we hear from them before, I think that would be good. But I don't see there being any real reason for an emergency move from them right now.
How do you think about these 7 stocks that basically make up the majority of what you see in the S&P? And I'm thinking, by the way, of NVIDIA, and I'm thinking of Apple and Amazon and everybody else.
So coming into this, I mean, first of all, the other thing to remember is although days like yesterday can feel really scary, the headlines are very scary, right? Japan went from 0 to bear market in 3 days. The VIX at 65. All of that very terrifying. The swings that we saw in the Treasury market that shouldn't happen. But coming into this, it was from a really high level. And right now, we're really only down, 8% in the S&P. That's nothing compared to a normal correction. So we still have room to go. And that high level was achieved by mostly those 7 stocks. So when you hit the skids and you hit volatility, a lot of the stuff that has most of the gains and is the most liquid is the easiest to sell. It's the first to go. So it feels the most pain on the downside, which is what we're seeing right now. But I think that's okay, too, because we needed a little bit of a right sizing in what's driving the market.
You want to weigh in on this crypto debate we've been having on this day?
What's the debate?
Well, the debate was that it's completely not correlated to anything at this point. Or maybe it's correlated exactly to the NASDAQ.
I think in this environment, it has been correlated to the NASDAQ because it's trading like a risk asset. The speculation has been, okay, if this Japanese yen thing continues, crypto will come in and save us because it will be uncorrelated to currency volatility. That's possible, but I think the rise that we saw early in 2024 has already been that piece. So, I mean, this yen thing is not new. This has been going on for a while.
But I think the question is every time there's something terrible happens in the world, in the markets, someone tries to assassinate the former president, what happens? Gold goes up, and Bitcoin acts as if it's NVIDIA.
So, and this is my speculation, my opinion. I don't have necessarily proof of this. I would suspect that many of the investors who are heavy in crypto, there's an overlap with the investors who are heavy in tech, heavy in headline makers. And when everybody in that basket gets nervous, you have indiscriminate selling and you see all of the risk assets in that basket go down. I think that's what's happening right now. That's what happened yesterday and what's been building for the last week or so.
What are you smiling about?
I mean, gold's basically where it was 10, 15 years ago. And
that's
so it
true
goes up $30 as a flat.
It doesn't go down.
Store
of value.
Bitcoin was 4,000.
Store of value.
Bitcoin was 4,000 and went up to 75,000. When it goes to 50, when people who don't like Bitcoin took a victory lap when it fell back down to 17,000, then it went back to 73 again. It falls to 50, and they take another victory lap. If it keeps doing this, if it keeps being the best performing asset for 1 year, 5 year, 10 years, and 15 years, sooner or later the store value arguments is just not going to.
I sort of agree with that, but then you have to assume that everybody's going to sit in it for 5 years, 10 years, 15 years.
They have been so far, though.
I don't think many of those investors do. I don't think that they.
You don't know about hodlers?
I know very well about hodlers, but because of the volatility that we see, that tells me that people don't stick around entirely. And if it is a store of value, you don't want to see that kind of volatility in an asset class that's expected to be a store of value.
I don't know any. Do you think stocks are a store of value?
No, not no.
Yeah, I don't either.
I think they're
because they can
prone
go
to volatility.
They can go from 2 to 100.
But they do something.
Well, see, then you change the rules of the game again, because there are people that think that Bitcoin does something too. What would it take for you to finally say, "Wow, it's amazing asset"?
I don't know.
I hope it's not too late.
The day you tell me you love me.